Story now, interest rates are likely to rise yet again at the end of July as pressure on residential and industrial property owners increases. FNB has released its property broker survey for the second quarter of 2022. It looks at demand and supply for a sample of commercial property in and around the 6 major South African metros. Loos is a property sector strategist at FNB Commercial Property Finance, and he joins us now to discuss the survey further. Mr. Loos, thank you very much for your time here on All Angles. At some point, I think when I read this survey, it said that this is actually a perfect time for the property industry. Is this a good time for those selling or those buying?
Well, I wouldn't say it's a perfect time. So it's never a perfect time, but I think it starts to become now. There had been some strengthening in the market, which means then it sort of moves more in favor of the seller. I think what we're starting to see in the second quarter survey is signs in the office and retail markets already of some renewed slowing again, not yet in industrial. And I think the reason obviously is these hosts of negative economic events, the rising inflation, the rising interest rates, and signs of a slowing global and local economy. I think that starts to take its toll on the property market, starting to weaken it again. So it becomes a better market in terms from a buyer's point of view.
All right. So these increases that we're obviously going to see, and obviously the repo rate, once the South African Reserve Bank announces the repo rate, I'm assuming it'll go even higher. So would you, would you advise somebody to actually be on the market to buy a home right now?
Well, if we're talking homes, commercial property, I think that yes, it's normally the time when first-time home buyers slow with their buying when interest rates rise, and commercial buyers too, to a lesser extent perhaps. But it's actually the time. It's the time when the seasoned investor actually starts looking for greater bargains, because there is a bit more financial pressure throughout the property markets when interest rates rise, and you can start getting better relative bargains. So the seasoned investor is normally snooping around more, I think, in times of pressure, which is mounting at the moment. But the bulk of the market normally is not. So the market slows as a result.
All right. Tell me what you see in terms of your trends in, when it comes to the banks actually giving loans, whether you're buying, a home or, property in the industrial sector, etc. Are banks willing to borrow right now? Are they borrowing even more?
Yes, I mean, the banks as a whole, if I look at the home loan side and I look at Uber, the mortgage originator stats, there's no real sign of much tightening of credit appetite by home loans banks as a whole. It seems to be very much business as usual, probably because there hasn't been a major increase in in mortgage stress yet. And I think my perception is there's a similar trend on the commercial side as well. It's very much business as usual. Often we lend sort of, as we call it, through the cycle. You take into account the inevitability that at some point interest rates do rise and at other points they go down, and you lend accordingly. You don't lend based on interest rates being low now and tighten credit appetite immediately when they get higher. So I think it's very much business as usual at the moment. That's my perception.
And when it comes to, for instance, office space and wanting to either rent or buy there, what would be your advice, especially how the market is doing right now? If somebody wants some office space, is it better to buy?
Well, that's a tough one. I mean, the office space, the office market at the moment is very weak. So I think that there are some investors picking up bargains, often not for office purposes though, but to repurpose old office space into residential property. That seems to be a significant opportunity at the moment. At the moment, office rentals are declining. If you want to be a tenant, if you're expanding your office space needs, or you're a new business wanting office, you've got, as a tenant or an aspirant tenant, very significant bargaining power, because rentals have been declining in recent years due to this high vacancy rate, which started rising before COVID as a result of a weak economy. And then, of course, COVID bumped up that vacancy rate nationally more because of the greater levels of work from home. So I think that the aspirant tenant for office space is in the pound seats at the moment, it does have significant bargaining power.
Now, what I find interesting is that the industrial property market is still quite the strongest out of the three, right? But then we have issues with Eskom. And if you are going to be in an industrial, market, you really do need power for your business to actually work. Is it still the strongest? Are you seeing it? Are you seeing a downward trend? I mean, we've had more days of load shedding compared to last year.
So as of yet, we haven't seen a weakening in the industrial market. It's our broker survey in the second quarter still pointed to that one strengthening. It has been the beneficiary of important structural change, and that's the move to much greater levels of online retail and a gearing up for new modern logistical requirements. So that has benefited the industrial property sector, it would seem. And the industrial property markets, especially in the coastal metros, have been very strong. But I think you make a good point. Reliable electricity and an economy, can't be this weak economically and continue to support a strengthening industrial property market. The manufacturing sector comes under pressure when our economy slows and when the world economy slows. Economy-wide inventory levels don't have to be as high. So I think in the near term, we might see the end of that strengthening in the industrial market for now. Given that we've seen strong signs of economic weakness brewing again.
Mr. Loos, thank you very much for your time and your insight here on eNCA. That was John Loos, a property sector strategist at FNB Commercial Property Finance.